How do you take away what's important? And how do you make sure the information you have is right and relevant is hard, right? And because of that, people end up making a lot of mistakes in fundraising. They get amply frustrated, and it's a process that ends up taking a lot of time. And a couple of folks I know have lost money and burned their hands in this process. So we thought, why not use the build 3 axis and get people like Brendon with us here today to sort of talk about this more openly and make sure you understand how the game is to be played and then become a participant in it.
And that's the time when you reach someone like an angel fund. So angel fund comes in at an early stage. Probably the stage could be something like a seed stage where angel funds typically come. Now, what is an angel fund? So angel fund could be something like, there would be angel investors. So 3-4 angel investors coming together and investing in a startup. Now, usually what happens is, let's say someone, Kunal Shah, founder of Cred, investing in your startup. So on the cap table, it will be 2 founders and Kunal Shah. Now, when you invest through an angel fund, when Kunal Shah invests through an angel fund, it will not be Kunal Shah, it will be the angel fund. So an angel fund will be on your cap table, but there will be within that angel fund, there will be 20 investors who have put in money. So now the operation part is something that you don't need to worry. The startup needs to worry. That has been taken care by the angel fund. But that's the difference between an angel fund and an angel investor. So see, from a founder background, what I mean to say is both academically as well as, the relevant experience that you have. Now, let's say, I'm building something into energy, and from an academic point, I may be, someone like a BTech guy, graduate guy, have done something into either mechanical engineering or something into electric or something into that. And I have good experience with, some top companies. And then probably I saw that, okay, during my experience, I've seen this problem that has occurred, and now I'm trying to solve a solution. So, that founder background is very important to understand. Let's say if I don't have that background, that I'm not an engineer, I'm just a commerce graduate, but let's say I'm still working in some similar industry and I've seen a problem, that still kind of is relevant for us because you have worked in that industry, you know how that industry is working, and you have seen these are the problems or these are the challenges, and now you have come up with the solution. So the story behind the founder, right, trying to understand, how he has come up with a solution and what problem he has faced, whether he himself has faced it earlier or whether some of his close relatives. So we try to relate to that to the founding team, which is very important, for us to understand whether the founder has probably seen this as a problem or no. That is very important. See, sometimes it also depends on what you are burning money for. If you are burning money to bring in more revenues, then probably that would be a red flag. But if you are, let's say, burning money in terms of, let's say, marketing your product more and more at an early stage, of course, probably since you are new in the market, it makes sense. But let's say if you have raised money, if you have reached certain stage like a series A, and still you are pushing your product in the market, then it becomes difficult, in terms of how this will scale or going forward. So it all depends on where exactly you are burning your money. And in terms of profitability, see, I have seen companies who are being profitable since day one. See, it's never a disadvantage to approach a VC firm, even if you are at an early stage, because at least you get a chance to probably know that firm, or the firm will get a chance to know you, who you are, what you are building. So that's always a positive side. At the end of the day, ज़्यादा से ज़्यादा क्या होगा? They will say कि यार नहीं, you're too early for us. But still, they could relook or probably revisit the company in 6 to 7 months of time. So it's always better to send such updates and stay connected with the investors.
So what I'm hearing is you need to do a lot of relationship building, right? At a respectful distance, right? Because you might be talking to hundreds of people every day. So no, without being overbearing, make sure you have the relationship, you're honest, you're genuine, and you really want them as partners, right? And eventually at some point of time, if you're doing good work, they will come around.